You may have heard the term escrow from your real estate agent or lender and be wondering, what is it? It's important to know what's happening in transaction as you buy a house, and it's important to know what the term escrow means, and I want you to know a little bit more about it. My name is Kevin Brierton, certified mortgage planning specialist and branch manager at Neo Home Loan. And I'm here to talk to you today about escrow and how it works. So what is escrow? Escrow is a financial arrangement in your transaction for your real estate purchase or sale. Escrow is set up by a third party to hold and manage the payments of the funds required by each party involved in the transaction. Having a third party provides more security in the transaction and keeping the payments in a secure escrow account or holding account, which it really only releases those funds if all the terms of the agreement are met. The escrow account is overseen by an escrow company, also known possibly as a title company. Though title companies and escrow companies in some states are one and the same, some other states are different. So it's important to understand the escrow company will be holding the escrow account. While the payments in the escrow account the transaction can be safely carried out without risk of losing money due to fraud, and escrow allows for secure transactions and more confident buyers and sellers. So how does escrow work? Escrow reduces the risk of fraud by acting as a trusted third party that collects and holds all of the funds and only distributes the funds when the buyers and sellers are satisfied per the contract. So here is when you'll be involved in an escrow account. First, when you make an offer on your house and you write an earnest money check, that will be placed in an escrow account. This is your first financial transaction. This is one of your first ones. What this means is the money is not going to the seller or lender. Instead, the money is actually going to an impartial third party, which is the escrow company. And this money is held there until you and the seller negotiate the contract and close the deal. You can't touch it. The seller can't touch it. The money is held in escrow. So that's going to be most common terms while you're buying a house. This is important because it gives you a peace of mind that your money is being held in escrow, protects both parties. Escrow is important because let's say, for example, you put your earnest money down as a down payment and it went directly to the seller. And they had your money, and for whatever reason, you and the seller didn't reach a final purchase on the house, and you decided to back out. You certainly wouldn't want the seller to be holding your earnest money as the negotiation tactic, and that could be a risk of losing the whole deal, losing all the money altogether. On the other hand, the seller wouldn't want to sign over a deed until everything's been agreed upon and paid, and of course wouldn't want to hand over cash on the house or the deed of the house without having it been signed by you. So having an escrow account ensures everyone gets everything that they want in the contract and essentially at the same time, and holds everybody accountable to the third party in the contract. So the next time you hear about an escrow account, when you're working with your mortgage lender or real estate agent, you'll know what it's about. The other term you're going to hear is escrow in your mortgage lender. So as you near the end of your mortgage, your lender may be talking to you about escrows, or also known as impounds or reserve. These terms are pretty much the same thing. I want to make sure they don't all get confused. So what they're asking about is to have the funds held by the lender to make your payments such as mortgage insurance, property taxes, and mortgage lenders often will give you the option to collect the monthly money up front. And so what you'll do is you'll actually pay into the escrow account. So you'll pay a few months into the escrow account and then collect every month. Tax and insurance will go into this escrow account or impound account with your lender. So it's an account that'll be holding your funds, and then it'll pay out your insurance and taxes when they're due. So you don't have to make these big checks to the taxes or the insurance company when they're due. That can be really hard especially for first-time home buyers. So every month that's being collected and then distributed on your behalf by your lender. So the other thing is escrows in your closing. So when you're getting ready to sign your closing documents on your home, you'll probably hear from your lender about close of escrow. So close of escrow, another form of escrow you're going to hear. The closing of escrow is when your purchase is completed, when you close. At closing, or your escrow officer will oversee the closing documents, handle the exchange of funds, and recording of deeds. They will ensure that all the money is properly distributed from that escrow account and from the lender and the seller, and everything's recorded. So they're going to help make sure all the conditions are met to make sure that you can close escrow. So before closing escrow, all that has to be settled. So if you're negotiating, there's another escrow you're going to hear also. It's called escrow holdback. So this is a situation where the home sale is completed, the ownership of the home has been transferred, but there's funds being held back in escrow. So for example, you may have agreed that the seller stayed in the home for an extra week until their home's ready. So let's say they're moving out and you want to give them a week to live there. That means that you had to sign a rent back agreement requiring the seller to pay a daily rent to you to stay in the house as a new buyer. So in this example, your real estate agent would be advised possibly to have an escrow holdback a part of those funds from the seller. So when the seller sells it, they're going to make money on the transaction from the proceeds. They can have some of that held back in escrow until they move out of the house. This is actually very advised if you have the seller stay in the house for a period of time, hold back some of their money. So when then they move out, then they're going to be more incentivized to move out because they want to get that money back. So that's an escrow holdback. Another situation of an escrow holdback is when you find something's wrong with the house or you want something fixed in the house, the seller may agree to make the repair, but that wouldn't be completed before your closing date. So let's say they can't get the workers out there for whatever reason, can't be done before. This example, the money can be held in escrow, which will be actually held with the title company, in most cases, held in escrow after closing for the cost of the repairs. So once your escrow is closed, all the funds have been distributed to you and the seller, and then everything will be finalized and all the other documents will be completed. So you will want to make sure you check the statement carefully and call the closing agent immediately if you spot any issues. Be sure to review the documents, make sure you know that the funds have been completed. If you ever do an escrow holdback, you want to make sure you understand where the funds are and what your requirements are as the buyer or as the seller selling the house. Knowing these terms in every transaction is important. I know there's a few different ways that escrows are going to be completed here. Just to really review it on a high level, let's keep it super simple. Escrow, there's going to be one to hold your funds for your earnest money when you're buying a house just up front. There's going to be a term of escrow or impounds for your lender for tax and insurance. That's after you close. And then there's escrow holdback account. And then there's escrow when you close. So your close of escrow is your closing date. And then your escrow holdback is post-closing on repairs or anything that you're holding for the seller if they're staying in the house for a little bit. So hopefully this helps. I want to bring attention to this because it is a little confusing. So go back and watch this. If you have any questions, feel free to message us, DM us, or go to mortgagestrategycall.com and we'll be happy to answer any questions and go through this as well. Thanks again for watching. Catch us on the next video. Kevin Brierton here, certified mortgage planning specialist with the Neo Home Loans branch manager. And again, thanks for watching. Have an awesome day. We'll catch you on the next video.